I realized, okay, I need to figure out what retirement looks like for me, or even scaling back. I need to start working on a plan to change how my life looks. It can feel like you're doing it wrong at the beginning because you're not getting those monthly paychecks immediately. And I decided to just go off on my own, no safety net, no backup plan, late 2017. They know everything about me. They know everything about my real estate journey. And so many of them are super interested. And it gives us something to talk about right away, you know?
What is up, everybody? I'm your host, Matt Drouin of the Go Big Live Real Estate Investors Podcast. I am psyched out of my mind to have Miss Jesse Dillon on. I've been actually wanting to get her on the show for a while. I actually connected with her. I was like, yeah, I'll come on your show. And I completely forgot about it and spaced. So I'm really psyched to have her on because she's a entrepreneur that is balancing kind of like into two different worlds. She is a real estate investor and also a business owner in a retail salon business, which we'll get into as well. So I definitely want to dive into, like, everybody's been in this like tween situation between those sort of things. So without further ado, I don't want to like do any spoiler alerts or anything like that. Jesse, welcome to the show.
Yeah, thanks for having me. Very excited to share my story. I feel like it's going to really resonate with your audience for sure.
Excellent. All right, Jesse, you were born and now you're here. What happened in between?
A lot has happened in between. So I'm 32 today. And throughout my 20s, I feel like my early 20s, I really struggled to figure out what I wanted to do with my life. I didn't really have direction, and I felt like I was an awful employee. Every job that I had, I was just barely skating by enough to keep the job. And I kind of thought it was this fatal flaw of mine until I realized, I found my passion in the beauty industry. And that was, early to mid 20s that I really found that I loved working in the beauty industry. It wasn't really something I had expected. A friend of mine got into it, and I was like, I feel like I would really excel at that and really enjoy it. So I worked doing education for a big box beauty retailer for about 5 years. And I loved what I did. I trained employees about different products, applications, customer service. And I really helped a lot of clients to, feel more comfortable in their skin. But at the end of the day, it was 2017, and all within a matter of maybe a month, 2 months max, I got engaged. I moved twice. I got married. I became a full-time step parent overnight. I totaled my car. I had to buy a new one. So everything in my life had changed basically overnight. And all of a sudden I had realized, ultimately this is retail management. So it comes with the pay and the hours and the commute that retail management comes with. And none of those things were fitting my life anymore. So I had already started working on my escape plan from that retailer. I figured, I have a cosmetology license. I'm going to take classes on lash extensions and permanent makeup, which is basically tattooing eyebrows, eyeliner, lipstick. And I decided to just go off on my own, no safety net, no backup plan, late 2017. So my business really took off in the next year. Like, it has evolved so much since that time. But right out the gate, I was immediately making twice as much as I was making in retail. Um, I was doing really well because I fell in love with social media marketing. I fell in love with the business side of everything. And I had a really great support system too. Like, my husband has always been unconditionally supportive of any crazy venture that I, brought up to him. Um, which I think helps with real estate because I gave him that proof so far that all of these crazy ventures work out. I will figure it out. So he just has no doubt in me at all that I'll figure out the next one too. But now, we're coming to like 2021. I've owned the salon for a couple years. It's doing really, really well. I'm working a lot. It's physical work, which you wouldn't really think. It's a lot of hunching over, repetitive movements. I realized I didn't really achieve this whole freedom that is supposed to come with being, self-employed. I felt like I kind of built this ball and chain almost that I was very grateful for and still am, but my life didn't really look how I expected. Um, I didn't realize until we were forced to close for a couple months during 2020 just how overworked I was and how many other parts of my life I was pushing to the back burner um, as a trade off. So I realized, okay, I need to figure out what retirement looks like for me, or even scaling back. I need to start working on a plan to change how my life looks. So I came across a clickbait article on Facebook about a 26-year-old girl who was retiring. And I'm like, I need to know whatever she's doing. So I read the whole article. I messaged her on Instagram and I said, this is my whole situation. If you were to recommend one book for me, what would it be? And she recommended The Simple Path to Wealth. I love this book so much. I read it. I went all in, 70% savings rate, investing in index funds aggressively. I was so excited about it until I realized it was going to take me 11 years of continuing to do this, like, backbreaking work, investing all my money. And I just knew I couldn't keep it up. So I was like, there's got to be another way. And one podcast led to another, and someone was talking about real estate. And like many people, I just had this assumption that to invest in real estate, you have to be an old man and be already very wealthy. So it came as a shock to me that none of that was true. And I figured, I have figured out this whole business thing already. I can probably figure this out too. I feel like I could. So I spent a couple months just really becoming a student of real estate. This is fall 2021 now. I read all the books. I listened to probably every single episode of the Real Estate Rookie podcast. I did the coaching calls and the boot camps and the meetups and everything. And when it all started to sound the same, and I wasn't really getting mind blowing amounts of information from each resource anymore, I knew it was time to actually start making offers. And I closed on my first property January 2022. So over the next couple months, I bought a long-term rental duplex, a single family home used for vacation rentals, another duplex that is a house hack, long-term rental, mid-term rental, rent by the room monster. And then I came to this point that every investor comes to where I realized, wow, I've been buying in an expensive market. I just bought three turnkey properties within 9 months and now I ran out of money. And I sort of felt like I did something wrong. And I was really beating myself up over it. But October 2022, I believe it was, I went to BPCon and I had this realization that I was just crossing a threshold now where that every single investor has to cross, where you run out of your own capital or you run out of time or knowledge or something, and it has to become a team sport. So I came home from that. I was really energized and I started making a plan for, okay, I have the time and knowledge, but I'm out of capital. So how do I find someone who doesn't have time or knowledge, but does have capital that I could partner up with? Fast forward, maybe 9 months, a partner and I had closed on a 13 unit long distance out in Chicago. So we closed on that July 2023. That project's doing amazing. These days, right now, I'm actually working on an even bigger project, same area, same type of property, just more units. And yeah, so I was born, now I'm here, and that's the in between.
Excellent. So, Jesse, in the green room, I wanted to dive into this sort of like this tween identity thing that a lot of investors face because, like, you kind of like grow out of the trading your time for dollars sort of thing in terms of what you're doing in the retail salon business, that sort of thing. It's like, okay, well, I want to build this empire. I don't want to spend my seed corn in terms of the cash flow from my investment properties. I want to keep and there's a skill that I've developed through this craft I've worked on all these years. So I guess that before we dive into that 13 unit deal, which I want to do that in detail, I want to ask, how do you balance those two identities? Because a lot of people struggle with that, especially when they're working full time or have a business and they have something that's completely different. I mean, at face value, completely different. There's a lot of similarities between both of the businesses, but kind of tell me about that.
They definitely are much more different than similar in the biggest way. And I actually have a peer who also owns salons and invests in real estate. And we kind of commiserated over this, where salons are very much a cash flow business. If you're not seeing a certain amount of cash flow month to month, you feel like the business isn't doing well. So, getting into real estate investing, where it really is more of a slow burn, especially like me, I'm focused on value add multifamily. It's not something that's really going to pay my bills for a couple of years. Um, it can feel like you're doing it wrong at the beginning because you're not getting those monthly paychecks immediately, right? Um, what really works for me is I do feel like I spend pretty equal amounts of time in and on each business every week. To clarify, I work in the salon behind the chair on clients 1 or 2 days per week. Other than that, I'm working behind the scenes, but I don't have a whole lot of work to do behind the scenes on the salon business anymore because I have a really amazing virtual assistant who's been with me since 2018, and she takes on a lot of that pressure. But it is challenging when I'm planning for every week on Sunday. I plan my week out in 3 chunks. So I make a list of everything that has to be done for the real estate business, a list of everything that has to be done for the salon business, and then a list of everything that has to be done just in my personal life with family, my house, stuff like that. Um, and one thing that I kind of struggled with and no longer do is how do I show up authentically on social media when I want to be myself and I also want to represent both of these businesses and I don't want to have 3 Instagram accounts. Like that seems awful. As someone whose measure of success is one day when I no longer have to use social media at all, there was no way I was going to have 3 Instagram accounts. And I felt like this pressure to have different super curated accounts like for each business. And once I just let go of that, it's been so much easier. Just showing up as, a regular person who also owns 2 completely different businesses online and just sharing both. And it actually has, it's been nice because when clients come in to the salon, they know everything about me. They know everything about my real estate journey. And so many of them are super interested, and it gives us something to talk about right away.
I completely I completely like relate to that because as a former real estate broker, I was here buying commercial properties, larger commercial properties. I would post a space that I had available in one of the buildings that I owned, and people would reach out to me like, "Oh, are you the owner? Are you the realtor on the on this on this thing?" And I was like, "No, I'm the owner, and also I'm trying to lease up this space." And they would ask, "Well, oh, do you own the whole building, or do you just own that like one office that's in there, or whatever?" And so it definitely was like one of those things in terms of like trying to like parse out my identity to my sphere of influence so it wouldn't be confusing, because like with how the attention economy and people just like want to be able to put things into buckets very easily and very quickly, it's difficult when you're owning 2 different businesses and that sort of thing. So thank you for sharing that. And I think that's awesome that you can actually leverage the two of those together, and so it becomes part of your identity. So if you have like clients that come in, I'm always like, I work with like dentists, for instance, that are part of my mastermind, and I'm like, if you want to put yourself in the position to raise capital, like build relationships with other dentists, like they relate to where you are. Not to say like you're going to be like, giving somebody a root canal and you're like, oh, hey, do you want to participate in my next real estate deal? But no, that's awesome. So let's jump ahead here. The 13 unit, like who gave you the permission to jump from where you were to a 13 unit building?
No one. So I knew that I needed X amount of units roughly to generate X amount of monthly income, like based on my income goals from real estate, to achieve over the next couple of years. Nothing that I was expecting to happen overnight. And I was like, okay, if I need this many units, I can either experience death by 1,000 paper cuts and do a million more duplexes, or I can just do bigger deals. And I think the biggest thing there were 2 big things I was worried about going into bigger deals. Number one, I was worried about sounding stupid. Like when I was going to reach out to listing agents about bigger deals, would I ask stupid questions that, of course, only someone who has ever bought a duplex would ask, you know? And like, would I not know certain questions to ask and then end up, in a sticky situation because I didn't know to ask some specific thing? Um, and the other thing I worried about was with lending. So I hadn't used commercial loans before this. So I was wondering, is this going to be a totally different process? Will they say, we don't even want to lend to you because you haven't done a deal this big? Um, and none of those awful things ended up happening. Everything just worked out perfectly fine. And I think what made it easy was that I had people to lean on who had done deals of that size, where every step of the way I could ask them, like, what am I missing here? Will you look at this pro forma? What do you think about this? What do you think about that? And just having people in your corner like that completely changes your whole real estate journey. Um, I would say like my one biggest mentor is Amelia McGee. She co-owns the brand Wire, and I heard of her fall of 2021 when I was listening to every single Bigger Pockets rookie episode, and she was on it. And I just really loved her episode. Like she made investing seem so easy and fun and uncomplicated, and like anyone can do it. And it's just not as often that you hear, a woman on the younger side talking about investing and having this impressive portfolio. So, um, and she was only a couple years into it. So that was also really cool to hear because that's so like easy to digest. I'm like, wow, I could be doing that in just a couple years. So I reached out to her. I did some one-on-one calls with her, and then later on, I started going to the retreats that her and Grace put on together. I've gone to 3 of them so far, and I want to go to every single one that they ever have in the future because I leave with just this new lease on life. Like I leave with all of my questions answered, total clarity on what I want to do next. Those retreats have just paid off tenfold. And at them, I meet more people who I now have their phone number and I can just text them and say, hey, you do deals just like this. What do you think about XYZ? Um, I feel like people in real estate are a lot more eager to help each other than in other industries.
So it was from these like duplexes, single families. It's like, okay, well, the traditional fire thing, like I would have to have started investing in S&P 500 index funds when I was 15 years old in order to get to 26 years old and be financially independent, or buy duplexes until the cows came home that each were going to pay me incremental chump change along the way. So you made this jump. What was sort of the first step? Like I always ask this question, it's like the chicken or the egg. Like, did the capital come first or did the deal come first? Tell me about that.
I am a firm believer in the capital coming first, and my feelings on that were recently driven home and confirmed because a lot of people say, oh, if you find an amazing deal, the money will come, right? That's a really nice fantasy for them. And maybe if you have like a email list of 5,000 people who are knocking down the door to give you money, maybe that's true for some people. But I don't have that email list. I like working on, I like a relationship based partnership. I like working with just one other person because you can so much more easily make 2 people happy in a deal than a ton of people. And if we together identify what type of deal we want, again, it's so much easier to meet everybody's expectations. So I'm a firm believer in finding the money first, establishing, okay, how much do we have to work with? And then based on that and the reserves that we'll have to set aside and closing costs and renovations, how much do we have for a down payment? What type of loan product are we going to be offered? So now what purchase price can we look at? What return are we looking for? Um, and my partner and I, we actually first were making creative offers on market in the Massachusetts area for about 6 months. And when I say we, I mean I. So I was in line with, dozens of other people who were making traditional offers because my fatal rookie mistake was that I was using creative terms to try to make all these deals home runs, but there was a million people in line behind me that were willing to take a base hit with conventional financing. So of course sellers were taking those instead. And it, like many people experience, it was hard to really communicate the value of a creative offer through a lot of listing agents. I think that's getting a little bit better, but I think it's still a challenge. Um, so after 6 months of that, I had realized, I think we should go long distance because we would be able to make that 20% down payment with the budget that we have in these other markets and get the same returns that we would have been getting with these creative offers. And I feel like my business management experience has led me to being a really good long distance investor, and I'm not going to be the one swinging the hammer anyways. So it really doesn't matter if the property's down the road or 1,000 miles away, especially because I have the flexibility to travel whenever. So it was a Friday in May that we had decided, I think we should go long distance. We decided together on Chicago, and we were under contract on Monday on this amazing deal. It was the first one that we had offered on. So it was just like such a funny lesson to learn that I feel like I should have known already, but I had to go through the motions. And then later on, we had closed in July.
Excellent. Let's back up a little bit. Was this relationship, I mean, did you first start off like on a search of like, okay, I need to find a capital partner, or was this sort of like random, like guerrilla tactics, like universe sort of working in your favor? Like you were microblading for a client or doing lash extensions and you're talking about real estate and they're like, oh yeah, I have like $200,000 or $300,000 to put in real estate. Tell me about like what led up to that and all of those things.
I think that's like every investor's fantasy, but not that it ever happens. But so I got back from BPCon. I was like, I have the time and knowledge. I just need to find someone who doesn't have those two things, but does have the capital and really understands the wealth building power of real estate. So I made a list of every single person I know in real life who I would be at least mildly comfortable texting, who probably knows somebody who fits that description. Somebody who is really busy with their day job, someone who, has built up a little bit of wealth, maybe in, their own brokerage account, or they're just a saver, or they just have a really high paying job. Um, but someone who understands money and investing enough to know that real estate generally, if you do it right, performs so much better than just dumping money into index funds. So that's kind of the description of the person I was looking for. So I made a list of everyone I know who might know somebody like that. So I looked through all of my last 6 months worth of text messages. I looked through my contacts on my phone, my Instagram messages, my Facebook messages, and then started the incredibly uncomfortable process of forcing myself to text five of these people a day. I was like, if I text five a day, I'll be done in 10 days. And then, I'll have made a really solid effort here. So the text was something like, I hope you're doing well. If you've been following me online, I think we're friends on Instagram. This is what I've been up to. And this year, I'm actually looking to do something a little bit bigger. So I'm looking to bring in a partner, somebody who doesn't really have the time or knowledge to invest, but knows, that real estate is where you win financially. Um, so just kind of putting feelers out there for if you might know anybody who fits that description. So I didn't end it with a question. So there's no pressure to answer if you don't want to. And I wasn't asking them personally. I was just asking if they know anybody. I said, share my information with people, feel free. And I had texted a former client of mine, and she was sitting at dinner with her best friend who perfectly fit that description. And then we were connected. We had a couple phone calls. We met for coffee. She met with a financial advisor that she really trusted and had worked with for a while. And then she was able to establish kind of a budget for us to work with. And then we went from there. We created our trust. We, opened our the trust's bank account. So we kind of got all our ducks in a row first and then started making offers.
Excellent. So when she talked to the financial advisor, maybe you don't even know this, but did did she liquidate assets that were in there, or was it sitting in cash, or did she use like a securities based line of credit to draw and put to this partnership? Like, do you know any of that information?
I believe she took money out of a brokerage account.
Okay, okay. Yeah, it's like one of the things is like, and I know that you're active on social media, and the thing that they educate on is that I've used a securities-based line of credit before against my, stocks and mutual funds, that sort of thing. And it's an amazing tool because you can actually keep your like liquidity on your balance sheet that banks want to see when they're lending to you, but also you have like a credit facility to tap into and that sort of thing. So like I put content out there once in a while to like just educate people on that. So it gets them thinking is like, yeah, I can take this and actually like make it work more like better for me and that sort of thing. So that's cool. So you formed this partnership, and was it like you just went out there, started looking you started looking for properties, you were making these creative offers, that sort of thing, just weren't going anywhere. You went to a new market. How were you like treated as an outsider in this like new market by this like agent? Were you like, are these people even real? Or like, tell me about that. Cause that's like definitely an issue sometimes.
I think I didn't really run into that honestly, because I feel like when you're going to markets that have great numbers for long-term rentals, there are a lot of out-of-state investors. Whereas, I live in Massachusetts, someone from out of state maybe contacting a listing agent about a portfolio in Mass, it doesn't really make sense. Like, why would you invest here from out of state? But, somewhere like Chicago where the numbers are so much better, I think it just makes perfect sense. There's a lot of out of state investors. But I do actually also feel like making that transition to a new market helped me overcome that fear of, do I belong in this room? Because I just got a chance to start fresh. I kind of was starting to feel like in my market that, the same agents were expecting creative offers from me and maybe weren't really taking me as seriously. Um, which is something I do feel like I deal with a little bit anyways, just being a younger woman. I feel like occasionally, when I'm reaching out, it's not really taken as seriously. But I feel like when I went to this new market, I could just show up with confidence. I was not going to be making creative offers. I could make stronger offers. And there was just like an energetic shift in me when I was talking to listing agents out there. I feel like that did make a difference.
An allegory I have here is, I don't know if you've ever traveled alone before, but it's like when you travel alone, you meet way more people because you're sort of like forced to, because of like your human sort of need for human connection. So I'm wondering if like, placing yourself in another market is like, it's like, yeah, I have like nothing to lose here because I don't have any relationships here and that sort of thing. Like, I don't know. Does that make sense in terms of like, maybe how you like that kind of strengthened yourself in doing that?
Yeah, absolutely. That makes perfect sense. I feel like it was kind of a chance to take a breath and just start over and present myself in a different way, you know? And of course, making creative offers on market, like, you're just going to get a million no's. So I feel like I was almost expecting the no's and maybe manifesting the no's at that point. So when I switched to this new market and was making just traditional offers, yeah, I could show up just with a different energy.
Absolutely. Let's talk about the numbers. Tell me about the capital stack, purchase price, rehab, business plan, the whole nine yards.
Yeah, so we started with I honestly don't remember exactly what the starting budget was that we decided on. It was either 200 or 250. And that was going to include reserves, down payment, closing costs, any initial renovations that we had to do right out the gate. So the property we ended up buying, 13 units, definitely a value add opportunity. It was listed for 1.08. We paid 1.06. We also got a really, really good seller credit. So that helped a lot because the property did need a lot of work. Like, it wasn't anything crazy, but it definitely had some deferred maintenance. Um, and we got into it with a 20% down commercial loan. So fast forward 6 months later, when I was writing my January email update to my partner, The new value based on bringing the rents closer to where they're supposed to be, not all the way. And just to backtrack, so I don't forget, day one, the property did cash flow conservatively. It cash flowed 800 a month. So we weren't going to be in the red. Um, so fast forward 6 months, we got the rents maybe like halfway to where they're supposed to be, which we're perfectly happy with to minimize, having to turn over more units. We did have to turn over 4 units. And the new value is around 1.54. It's cash flowing 3650 a month. And based on the new value, we're about 54% leveraged. In another, I would say year, maybe 2 years, because I like to plan 3 years for like a full value add process just to be safe. The property really should be worth 2 million and should cash flow over 6,000 a month. And at that point, we will be less than 40% leveraged, and that doesn't count debt pay down. It doesn't count natural appreciation or natural rent growth or anything. It's just based on how the property could have been performing at the time that we purchased it.
Excellent. So is the plan to refinance it and deliver your partner's capital back to them, or tell me about that?
So we had agreed in our operating agreement that we're really ideally looking to hold this property long term, like at least 10 years. But after year five, if either of us want to sell, then by default, we will sell. Um, and at that point, when our rate adjusts, we'll have so many good options. Like we will be in a pretty good position as far as how leveraged we are on it. So we'll have to just kind of run the numbers at that time and see, does it make sense for us to sell? Does it make sense to 1031? Does it make sense to cash out refinance? Or does it make sense to just take our new interest rate and keep cash flowing on it? So we'll be in a good position where we'll have, I think, some really good options.
We'll be staying tuned for sure. So let's talk about the debt. How did you find a commercial lender when you had like no footprint in a market? Tell me about that.
I found a listing agent that I really liked. The listing agent for the property, I was having a really good experience, like getting information from him and everything. And he made a couple recommendations for mortgage brokers, and he also recommended a real estate attorney. She had also recommended one of the mortgage brokers that the agent had recommended. So I had phone calls with a couple different people, and I ended up really like getting the best vibe from him. And I had a great experience like throughout that whole process. We got a really great interest rate too. And I think especially for going through closing on my first commercial loan, he was a really, really good mortgage broker to end up with.
Okay, great. So he brokered the deal and placed it with, did it end up getting placed with like a community bank, or was it like more of like a national or regional outfit, or what?
National Bank.
Okay, got it. And then on the personal guarantor side, I just assume this was recourse financing, I assume.
Yes, so myself and my partner, we both personally guaranteed it.
Okay, so you both had the balance sheets put together to satisfy your strength as a personal guarantor. Then, okay, cool. Wow. So from $800 a month to 3,600 to projected, God willing, $6,000 a month. That would be a deal like, Barbara Corcoran said, I like to wait for my deals to be, super juicy before I get my money. So that definitely sounds like a great one. So I guess like, what did that deal do for you as you stand today?
I mean, I think it raised the bar for me because now I really would like for each deal I do to be a little bit bigger than the last. So now viewing my investing goals from through that lens of like I want the next deal to be bigger than that. Not necessarily better because that was an amazing deal. I'd like to just do that one over and over. But yeah, it's raised the bar for me for sure. So it's forced me to then go back and be like, okay, well, how can I do a bigger deal? Like, what would that look like? What do I have to overcome? What hurdles do I have to get over? Um, but it's also been a pretty big wealth builder for me so far, too. So I don't have any capital into that deal, but I do have 50% ownership of it. And we're not cash flowing yet. But or we're not taking money out yet, but once we do, that's going to make a pretty big dent in my goal of being completely work optional. So, and it also really has added a pretty strong, it's made a pretty strong difference in just my track record, like versus just doing single family and duplexes. Now, being the active partner in a 13 unit, I feel like it definitely helps me attract future partners, and just helps me be taken more seriously too by like other commercial lenders or commercial, agents.
That is money advice. I take that because I usually ask, you know, a lot of our listeners in the show are kind of like feel stuck in that, single family, duplex, triplex type of growth and these properties that don't really move the needle financial wise very much. And they're looking to break into or swim upstream into commercial deals, that sort of thing. I think you hit the nail on the head right there in terms of that. So I'm not even going to ask that question. So my concluding question right now is, um, the real estate, I mean, let's face it, it's a white male dominated industry. So for the young women that are out there, I'm not asking for you to, to talk on the entire, on behalf of the entire, woman part of the human race. But for the young women out there that are looking to, scale and swim upstream, like what would your advice be to them?
There is actually a book that would be really helpful for anyone who's kind of dealing with that. I believe it's called The Only Woman in the Room. Um, it's written by or compiled by a big personality in the real estate space. So that would be a great book to start with. But also just find people who are like relatable to you, who are doing what you want to be doing within a couple years. I've found so many female investors to look up to who I really feel like I can relate to, who are real people and not just strictly business. Um, I really love the Wire community. There's a Facebook group, there's an Instagram account. They do retreats, they do free monthly meetups online, actually, just providing value. So that's a really great place to just meet other people and get proof of concept, like get the proof that if there are other young women doing it, there's really no reason that any young woman can't do it.
Absolutely. All right. So if you got, I mean, here's the thing. I'm going to say it. I have a daughter. I'm going to say it right now. The future is female. So go out there, get real estate, stop thinking about it. Surround yourself with people that are, and add them to your peer group. So that being said, we are getting to the end of the recorded portion of this podcast. So if you want to get in the live, exclusive live Q&A with absolute real estate titans like Jesse Dillon, like Ashley Kerr, like Beth Azor, like Dr. Sherry Fluellen, like Paula Nichols, and then many more of the powerful women that are in real estate, you got to get on our Facebook group called the Go Big Live Real Estate Investors Group, where we post these episodes weeks ahead of time. And also you can get in on the live Q&A and ask your questions directly to our esteemed guests like Jesse. So that being said, Jesse, thanks you so much for being on the show. And I'm looking forward to talking to you soon.
Yeah, thanks for having me.